everybody. It's Joe with you here on a Tuesday. It's September 5th, coming out of a holiday weekend. It is the Labor Day weekend. For me, it's the sign of the end of summer. Kids are back to school, so on and so forth. For others, it just might be another holiday. Just make sure you're not wearing white. I've got my 2 cents. It's my opinion. Along with all these videos, take responsibility for the outcome. You know the drill. Let's jump into it. Folks, I'm going to break down some news of the day if there's any out there, broad equity market analysis, and let's see what's going on when it comes to sentiment, any sort of change in the heat map or sector rotation, along with technical breakdown. I'm also going to include some bull, bearish, and sideways trades, if any. Every day presents different types of trades, and sometimes there's just nothing out there. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Jumping into the market analysis, as we jump straight into it, you're going to see that we're just a little bit more hesitant than I would have liked. We had a pretty extremely strong move on Tuesday, and since then have really done nothing. Now, this has really done a couple of things. It's destroyed a pretty good bearish trend, or I should say a bearish pattern in the overall markets. But there is just no follow-through. I'm not seeing any sort of oomph when it comes to, hey, that was it, let's move higher, like we've seen all summer long. Well, first of all, let's see what just happened in the overall markets as far as how we finished. Not a lot. Dow, the S&P, the Qs, all pretty much flat. Dow down about 0.5%, S&P about 0.5%, the Qs pretty much flat. The Russells took a pretty good kick at down 2.1%. Now, this has also been an area that we've seen the markets really rally in this oversold bounce that we've been talking about over the last little bit. Oil and gold, a little bit different. Oil has been a pretty good move, 1.34% today, and gold down about 0.8. Now, I don't want to look too far into it, but the majority of any strength that I've seen over the last couple of days, yes, folks, we came out of a holiday, has been in the energy sector, a little bit more defensive. So on the daily news side, folks, the market slides slightly lower. I'm just going to call it that, coming out of a holiday. It's very difficult to gauge where the market sentiment is. That Tuesday move, and I'm going to show you that here in a second, really kind of threw things off for me as far as a chartist. It just seemed to break above everything, but it's really not got, it really has no follow through, and I'm not really scared of it when it comes to maybe my reluctance, or I should say negative one outlook. Less bearish in the technical signal, but it's still a pessimistic pattern because of some of the indications we're going to show you here. The VIX, however, has shown a little bit more complacency. Now, there is complacency, hubris, arrogance, right? Ooh, kind of goes together. So I don't want to say I'm a super bear here, but I'm having a hard time buying into these markets or, hey, that was the bottom, let's get going, let's move up to new highs. That's my opinion. So let's just jump straight into it. Now, the advanced decline line here, 73% declining, 24% advancing, above, below the 50-day moving average, exactly what you'd expect, 63% below, 37% above. It was definitely a bear day, but overall, does this make it a bear market? Well, let's dig deeper into it. Jumping into the charts, this is what I'm talking about. So we've been seeing a pretty good move off of this bounce, but things that just kind of make me scratch my head. This beautiful bearish engulfing candle that seemed to just be wiped out. And then you have this massive bull surge off of a pretty reduced volume when it comes to what happened the day after that big bear candle. So I would expect a little bit of a surge or a follow through, and we have done nothing but just disappear. The bears had their push, a little bit, maybe an oversold bounce, maybe some sort of bottom fishing, but absolutely nothing to follow suit. I'll tell you what it did do, in my opinion, is it scared all the bears away. All the bears just disappeared. You see this huge candle breaks this crossover. We get this bearish crossover of the 20 and the 50, and we get this big green candle, and it scared all sorts of selling away. But no follow through in the buying. So this gives us this really weird situation of where I don't really want to sell everything here because we do not have our awesome bear, or excuse me, head and shoulders that I wanted to see. In fact, it's broken above. But I'll tell you what we do have. I want to draw this again, brand new, is descending highs. That's a fact. It doesn't matter what's going on here, right, when it comes to the overall patterns that are broken, but we do have lower highs. This pivot has been confirmed, and today was, don't get me wrong, not a lot of volume, but it was pretty bearish considering where we finished. So I have to say, guys, I am definitely glass half empty on the overall chart. Doesn't mean that I'm right. That's why we trade the markets in front of us. Let's go to the Qs. Something very similar. We did have we are descending. We did have the descending volume, still the same. We had that big engulfing candle, which didn't go anywhere, and then we had this huge surge on Tuesday, which so far, knock on wood, folks, if I'm a bear, knock on wood, has not gone anywhere either. But it is definitely above this head and shoulders. So the argument for some of those bulls out there could be we could pull back and bounce off this area. It's too early to tell. So where does that leave me? Easy. I'm pretty much flat. Let's go to the heat map, and you can see what participated. Well, what you'd expect. Microsoft, Tesla, a lot of movement here in the energy sector, which I know we've been talking about as a flight to safety. And if there is indeed some worries out there moving forward, we would see that push to safety. If it's an oversold bounce, that could also raise its head. So was it an oversold bounce or something a little bit more substantial? It's too early to tell. Where am I at? Exactly what you think I'd be at. Flat. Zero. I liked what Corey said last week about, look, the markets are moving higher. Sure, they broke that head and shoulders pattern, but there's nothing in them that tells me, hey, we should actually just turn the volume back up to 11 and start buy. We've got some reluctancy when it comes to growth, some expansion, worries about the Fed, but when it comes to volatility index, let me pull this chart up here real quick. You guys can see that the VIX has actually just been catastrophically falling back down. So there is some complacency when it comes to some of the things that, as far as options go, that the markets are very comfortable and more optimistic than they might seem. Doesn't mean that they're right, doesn't mean I'm right. So let's break it down to what it is. I've got above the 20, above the 50, but the slope's off. I've got a 20 below the 50. Sure, they're both sloping higher, but I do have a lower high that has been confirmed with today's action. Today's action can change with a gap up, but I believe this might come in sideways or a little bit lower, and that might give us something a little bit more ominous. So I'm going to stay zero for the monthly outlook, zero for the weekly outlook, but folks, me personally, I'm leaning more towards the bear side. What do we got for potential trades? Take a look at what's leading. APA, COP, NOV, all energy companies. My favorite stocks that actually have turned bullish that are showing some strength are energy. That's a flight to safety. NUE, GE, potential trades on the sideways side. Although, to tell you the truth, most of the stuff that's been on my potential neutral trades have actually broken up or down. But I'm going to stick with these two for now. I've got GE we can take a look at here in a minute. Potential bearish trades, there's a bunch. These are ones that have been floating around with the Maverick community for quite a while, and they still look pretty cool. Let's jump into the APA trade. This is one that I thought would be cool when it comes to the upside. It is in the energy sector. I just like the ascending triangle pattern that we got going on here. A little bit of a reluctant move when it came to today's action, but the markets did slide to the downside quite a bit today. So I don't expect this thing to break out without any sort of help when it comes to momentum in the overall markets. So let's move on to the sideways. We've got GE. Now GE is actually, it was showing some strength for quite a while with this gap higher, and I believe that was its earnings. But ever since then, it's been kind of slowly meandering to the downside. But it is still respecting the support here at 112. As long as it can stay there. Now, folks, understand that long sideways trades don't last forever. Eventually, they will break up or they'll break lower. But if this could come down with some strength, and if you do believe the markets are actually going to sustain the levels they're at, stay sideways, or even get stronger, then there's an argument that this could actually stay above its 50-day moving average. I do love this trend. the 50-day, the 20-day, it is definitely outperforming and looking really nice. So sideways to up or just sideways, taking into consideration resistance at 116 and a support at 112, even down to 110, you can make the argument for. It just depends on how wide of a berth you want to give GE for a sideways trade. Now on the downside, there's a bunch. UPS seemed to just jump out, and the reason being is because it had a beautiful day today to the downside. 2.4% increasing volume. Let me get my pen out here. Increasing volume here with a nice break below a pretty substantial support level that it has at about 167.5. So it looks like it's falling. Sure, this would be a hard one to catch because it will continue to fall if it's going to continue to be weak. This might be something you're not going to get at 164 here. You might have to chase this thing down to 161, 160. That's fine. If you miss it, wait for it to recover. Maybe an oversold bounce, a bear rally, all sorts of opportunities just depending on how bearish you are in the longer term. So overall, folks, there's not much to go off when it comes to just one day after a holiday. I'm not jumping in to buy anything or short anything. The markets are above June resistance levels, but they're not showing anything that makes me believe they're going to get past that. Very light this week in economic reports, so we are actually going to see what the bulls and bears will do with each other when there's nothing to mess with them. Lots of Fed speak, sure, all sorts of presidents across the whole Fed gamut that's going to say, give their 2 cents. As always, make sure you check your potential trades. We are moving out of earnings season. I don't think earnings are going to have any sort of impact on the sentiment moving forward. This is now a situation to where, do you want to be in a stock based on the levels it's at, or do you not want to be in a stock? And that's going to come down to the investor. It's going to be interesting to watch over the next few weeks. All right, folks, as always, thanks for joining me. We'll talk to you next time. Bye, everybody.